Turning your business into an S-Corp can save you around $8,000 a year in taxes. Or it can cost you money and put a target on your back with the IRS. It all comes down to one number. And in the next few minutes, I'm going to show you exactly where that line is, with the real math. Here's the thing, most videos on this get wrong. They either hype the S-Corp like it's a magic loophole, or they bury you in jargon. I'm an accountant, so let's skip both. I'll show you the actual numbers. 3 things, quickly. 1. What an S-Corp really saves you. 2. The income level where it actually starts to make sense. And 3. The catch nobody talks about, the one that can get you audited. Let's start with the one sentence that explains this whole thing. An S-Corp doesn't save you on income tax. It saves you on self-employment tax. So what is that? When you run a normal LLC as a sole proprietor, you pay self-employment tax, that's 15.3%, on all of your business profit. That's Social Security and Medicare, and it's on top of your regular income tax. An S-Corp changes one thing. It splits your profit into 2 buckets, a salary and a distribution. You pay that 15.3% on the salary, but the distribution skips the self-employment tax entirely. Now you might be thinking, great, I'll just pay myself a tiny salary and take everything else as a distribution. Hold that thought, because that's exactly where people get themselves in trouble. We'll get there. Okay, let's put real numbers on it. Meet a business owner with $160,000 in net profit for the year. One owner, no other employees. First, let's run it as a regular LLC, a sole proprietor. Self-employment tax is charged on about 92% of your profit. So on $160,000, that's a base of about $147,000. Multiply that by 15.3%, and the self-employment tax comes out to roughly $22,600. Remember that number, $22,600. Now let's run the exact same business as an S-Corp. Same profit, $160,000. This time, the owner pays themselves a salary of $95,000. Payroll tax on that salary, same 15.3%, is about $14,500. The other $65,000 comes out as a distribution, and that distribution is not subject to self-employment tax. So the employment tax on it is 0. So let's compare. As an LLC, about $22,600 in self-employment tax. As an S-Corp, about $14,500. That's a difference of roughly $8,000 every single year on the exact same business. Now, here's the part the tax hack videos leave out. An S-Corp is not free. First, the costs. To run an S-Corp properly, you have to run actual payroll. That's usually a few $100s a year for a payroll service. You also file a separate business tax return, and that typically adds $1,000 to $1,600 to your tax prep. Some states pile on their own fees too. So that $8,000 saving. After these costs, the real net saving on our example is closer to $5,500 to $6,000. Still real, still worth it here, but smaller than the headline. Second, and this is the big one, that salary you pay yourself has to be reasonable. You cannot pay yourself $10,000 and take $150,000 as a distribution. The IRS calls this reasonable compensation, and if they decide you lowballed it, they can reclassify your distributions as wages, hit you with back taxes, and add penalties. This is one of the most common S-Corp audit triggers. So an S-Corp trades a tax saving for more admin, more cost, and more rules. For the right business, that trade is absolutely worth it. For the wrong one, it's a headache that saves you nothing. So the real question, at what income does an S-Corp actually make sense? Here's the honest rule of thumb. Below about $60,000 in net profit, the extra costs usually eat most of the saving. It's often not worth the hassle. Between roughly 60 and 100,000, it starts to tip in your favor depending on your state and your costs. And once you're consistently above $100,000 in profit, the math usually works clearly in your favor. But notice I keep saying roughly and depending. That's not me hedging. It's because your state taxes, your other deductions, and your specific salary all move the line. The point is, it's a math question, not a magic trick. Run your own numbers, or have someone run them for you before you switch. If this made the S-Corp decision clearer, do one thing for me: subscribe. I break down one of these tax questions every week. Plain English, real numbers, no hype. So you stop overpaying. And if you're leaning toward an S-Corp, watch this next. How to actually pay yourself the right way. Because getting that salary number wrong is exactly what triggers the audits we just talked about. I'll see you in that one. Quick reminder: this is general education, not tax advice. Your situation is your own. Talk to a CPA before you make the switch.